Hello, everybody. This is Adam Rose. I'm the Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. And this is another episode of the Mortgage Guy video blog or video podcast. And this is the one where you get to learn a little bit about title work. And today, I have a special guest. His name is Matt Anderson. He is the owner of Republic Title, a.k.a. Summer Sausage. And he is going to explain kind of what their role is in the title world, in the mortgage process, right? What they're doing. While we're doing our side of things. So, Matt, we get that kind of a question all the time. Hey, what are all these fees? What's this title company thing? I don't understand. What do they do? So what's your guys' kind of role? Like, what are you doing in the background while we're doing our loan piece on the credit side?
Great question, because for the last 30 years, anytime anybody has ever asked me what I do for a living, I say I sell insurance, because we essentially sell title insurance, but you tell somebody you work at a title company or own a title company.
I'm going to put this down here so I can hear you better. There we go.
They don't
That's
know
better.
exactly what it is you do.
Yep.
So we serve as a third-party intermediary between all parties in the transaction. So you have buyer, seller, lender.
Right. And
somebody has to be an independent source of conglomeration.
Right. So kind of a go-between.
A go-between. But our main duty is to make sure that the purchaser has a first and best. I'm sorry, the lender has a first and best lien position, and that the purchaser has a bona fide title.
Right.
So
we close. There's nothing hanging out there that's going to cause a problem for the buyer that has to pay something off, or we're in trouble as a lender, right?
Right.
Meaning, if something were to happen to that buyer, they stop making payments, we're there. We're in first position. We don't have a bunch of other stuff hanging out there.
Right. So just to take you through the whole process, you get a buyer, you do a loan application, you typically order your title and your appraisal at the same time. And title's technically the term for your title commitment, and that's our commitment to insure the property. So you engage us through a new title order, and then at that point, we review your contract, we review the buyers, make sure we have all the information. I know sometimes you'll get an email back saying, we need additional information. And at that point, we send out notices to both agents, if there are agents in the transaction, and we order our title exam through an independent examiner, or somebody on our staff, if it's a local county, will do that themselves.
Right, and they go to the recorder's office, pull documents and stuff like that. Is that right?
We actually search multiple offices. It starts in the auditor.
Right.
And most of the auditors, it's online, so you're not physically anymore going to the auditor's office like the old days where you have to go look at microfiche. Starts at the auditor's office, and you create your chain of title starting there. So you find out the ownership, verify the legal description, whether it's a brief legal or you got multiple parcels, and then you work your way back. On a purchase, we go back 42 years. So you're going to work your chain of title, buyer, seller, buyer, seller, buyer, seller, all the way back through those 42 years. You're going to record every lien, and then you're going to make sure each lien was paid off. And you're checking those liens in the recorder's office, the clerk of court's office, probate, and then we run, or the current owner will run, bankruptcy. So we do that through Pacers.
Right. Make sure no one else is trying to make a claim to the property, anything kind of odd or weird. So on that topic, so one of the pieces that we always get a question about is owner's title insurance, right? So when we disclose these loans to these buyers up front, we're disclosing the title pieces, our piece, of course, owner's title insurance, which is an additional layer of protection for that buyer up front, which is an optional thing. But everybody's always asking, hey, what is it? So what do you think? What's the best way to explain that to that buyer?
Essentially, it's the only protection for the buyer, because in a loan transaction, cash purchase, everybody, there's no lender involved.
Right.
In a loan transaction, you're always getting a loan policy of title insurance. That ensures that you as a lender are in first and best lien position. Nobody takes priority over you. That has no protection for the buyer. So the buyer's risk is all depending upon how much money they put down. Most claims appear in the first 3 years.
Right.
So let's just say it's 100% buyer and there is a claim. And a claim would be where somebody makes a claim to the property, whether it be unpaid taxes, judgment lien, fraud, forgery, like somebody sold the property or signed on behalf of somebody that did not actually own the property, a unpaid mortgage, unpaid federal tax lien, just anything that can occur. And these can occur in so many different ways. So the more money you put down as a buyer, or the longer the term of that loan gets, where you put more money into the property,
Right.
you've
That's
got
the
more risk.
That's where you're at.
That's
in
where
the
you
risk.
have more risk.
Okay.
So as a buyer, you want to assess that. I mean, me personally, just for the small cost that it's going to take, it's going to be just the comfort alone of knowing
Right.
that nobody can attack your property for a prior act.
Right. Which, I buy investment properties, right? So, and I usually am doing a large cash investment in those. So I always obtain it
Oh,
because,
100%.
when you're throwing a lot of money out there, that's your only protection, especially in the short run, right?
Right.
Whether it's long-term investment or you're doing a flip, you just got to have it just in case.
And depressed properties typically have more risk,
Right.
because you're running
Foreclosed
into a situation
properties.
to where somebody's selling it to you at a discount for a reason. They're in financial trouble. So
Right.
here in Ohio, we have two different methods of closing, and it depends on what part of the state you're located in. The northern half, Columbus North, and a little bit in some of the surrounding areas, do what's called an escrow style closing.
Mhm.
Buyer signs, deposits their money, lender deposits their money, seller signs. Then at that point, we update the title, file the deed and the mortgage, and not until you file those documents and you've verified that no intervening liens have been filed do you disperse.
Right. So you know what? That's funny you bring that up. So a lot of times, and it's close to us actually. We're here in Sydney. We're along the I-75 corridor, so we do a lot of business all over the state. And when we get north, usually that Lima area and north, we usually get that question from agents, random email, right? Hey, do you know if that document got recorded yet? What are you talking about? Yeah, did they record the mortgage? Did they get everything recorded? Because my broker's not going to pay me until it's done. And that's that style, right?
Yeah, that's
that we're
the escrow
referring
style,
to.
because the title company doesn't issue any checks until
Right.
everything's been, and it's for the title company, it's safe. Or for a safer, and for a buyer who doesn't purchase an owner's policy of title insurance, it's safer.
Right.
So whenever we do a title search, the industry standard is you got like your title commitment, our commitment to insure, like the effective date of our exam is 30 days.
Mm-hmm.
So if there's the rule of thumb, and we operate a little bit closer, is when we issue you a commitment, that's good for 30 days. Nobody updates it within 30 days. So if you close within those 30 days, you have a gap in there in which something could have occurred.
Right. Okay.
Let's just say in that time period, the seller doesn't pay their taxes and a state or federal tax lien gets filed. If we don't update the day of the closing, we might not discover that, right? So inside of that owner's policy or loan policy for the lender, there's what's called gap coverage, and it covers you as the insured from the date of the effective date of the title commitment through the recording date of the insured document, which would be the mortgage, or the deed which transfers the property.
Right.
So that race to the courthouse to get your lien filed can sometimes come down to days, minutes, hours. You know what I mean?
Sure. Sure.
So,
and for some of the people that are watching, and we're talking about this and how those closings occur, how we operate is we don't do an escrow style close like that.
That's correct.
We wet or table fund those closings. So that means, once buyers sign, once sellers sign, our money is already at the title company for disbursement, for the agents, for the sellers, if the buyer's getting money back, whatever's going on. So that's how we operate. But the example I was given earlier is mainly because even though we fund some of those northern counties, the brokerages for real estate agents, they don't touch it. They don't release any of their own funds to their own agents until sometimes it gets recorded.
That's correct.
Which it's not a bad method. I mean, I'm sure it's aggravating for some people, but I like the table fund. But I understand there's some additional risk to the way we do those.
Correct.
Right?
And that's why you buy, as a lender, a title policy that protects that. And that's why we, as a title company, through our underwriter, issue gap coverage.
Right.
And that's just one area where a title claim can come about.
Right.
And keep in mind, a claim is just that. It's a claim. That doesn't mean it's a valid claim.
Right. Yep.
So what is also built into that title insurance is the defense of the title. So whether somebody has a claim that's valid or invalid, the title insurance picks up the cost to defend that claim. So let's just say you spend $800 on an owner's policy of title insurance.
Mm-hmm.
If somebody, whether has a valid or invalid claim, and makes a claim to that property, you have to hire an attorney to defend that in court, right? Your retainer is going to be way more than $800.
Right.
So
yeah.
you're already
that
your
insurance
money
has already paid for itself.
Yeah, it's already paid
Right.
itself with just the defense of that claim.
Yeah.
And they can come in many forms. We've had a scenario where, and this is where, I always advise, lenders and lenders and real estate agents don't just flat out say you don't need a owner's title policy, because you're exposing yourself. Let's say let's say the buyer says, "Hey, should I buy this?" You email them back, "No, don't do that. You don't need it. They did a title search."
You could be liable for that, right? So
I don't know, but it's like it's your reputation at least.
That's a question mark, right? So yeah, so when I talk to clients all the time, that's the last line item that's on the loan estimate.
Kind of scared to drink this again.
And how's that coffee, by the way? Is it good?
It's a little bitter.
Yeah.
I don't know.
I thought you liked bourbon, so I put a little extra in there for you. So
I don't think there's any coffee in there.
It's straight.
Did you
I was
microwave
actually
the bourbon?
I was actually going to say, hey, I got you a glass of water, and it was just going to be a full glass of vodka.
Yeah.
But
There's no playing that off.
we got that before the show started, so we'll probably put that at the end just so you can see the reaction. But when I was explaining owner's title insurance, right, I explain what it is, what it protects. It is always optional, right? I'm not going to push it on the buyer, but I allow them to make their own decision based off their risk tolerance, of course. And it's one of those things where you're not thinking of it during the transaction, right? The buyer is not worried about owner's title insurance. They're trying to get
money
the documents
together.
needed to us. They're trying to get whatever they need for us to get to the closing table, and then we lay it back on them again, right? And say, hey, final reminder, you've got 30 days to purchase at a discounted rate.
That's correct.
That's how that works, right?
When you buy an owner's policy and a title when you buy a lender's policy and an owner's policy,
right,
simultaneously, it's discounted.
And their definition of simultaneous is within 30 days of that close.
Yep.
Right. Okay.
That's correct.
So, and then there's two more things, because I know we're going to be going a little bit long on this video, but it's definitely going to be worth it. Is one thing is closing protection coverage, right? So when we get to the table, the last line item that we talk about, buyers and sellers, is, hey, I have to offer you this weird ass insurance.
That's correct.
That
and
nobody understands how
awkward.
it works and what it's for.
Yep.
So what is closing protection coverage?
Well, and I'll tell you, I can glaze through a closing in 10 minutes, and then there's two things that will hang up that closing, and that is the explanation of prorated real estate taxes,
Yep.
especially if
That's
it's
a big one.
properties in Montgomery County.
Mm-hmm.
And every time closing protection covers, unless it's somebody that just sold their house and got it explained to them at the closing an hour before. So closing protection coverage came about as part of Senate Bill 185 in, I think, 2010. That was after the housing collapse. And what had happened is, title companies, started to lose business. People miss that some owners that maybe got accustomed to a lifestyle, and all of a sudden that lifestyle didn't have any money coming in for it. So they started borrowing money from the escrow account. Well, as business slowed down, that escrow account started going upside down.
Right.
And so, those kind of things, and, there was other factors. Ohio was one of the first ones, if not the first, to implement offering that protection to the buyer and the seller. Prior to 185, it was only offered to the lender. So what that does is, and just to let those listening know, the lender, in every occurrence that I can remember, gets the loan or the closing protection coverage.
Right.
It's different prices for different parties. So $20 for the buyer if issued along with a loan policy or a lender's coverage, $55 for the seller.
Right. So I mean, most people don't take it.
Yep.
Right.
So, no, most people do not.
So,
if you think about the difference in the cost, there's different risks involved.
Right.
Most of the time, the buyers are bringing us money, right? And a lot of times it's not that much, whereas sellers are receiving money. So there's more money being insured.
Right. So we're insuring money that is exchanging hands at that time.
And handled by
the
us.
borrower's money.
Yes.
The seller's proceeds.
Correct.
Okay.
And I've sat at the closing table. I've tried not to correct too many people, but a lot of people will call out things that this covers that it doesn't. What it covers is basically fraud committed by the title agent, misappropriation of funds committed by the title agent, not following the purchase contract, or not following the lender's closing instructions.
Closing
that
instructions.
would cause a loss of those funds. So, for example, a perfect example would just be somebody who managed the title company's escrow account embezzling money.
Mm-hmm.
And then when that seller goes to the bank to cash their check, the check bounces.
Right.
At that point, the underwriter, our underwriter, we have two, General Title Insurance Company and Old Republic National Title. At that time, they would kick in to cover those funds.
Right.
If you didn't buy the coverage, then you would have to wait to see what happened in court. You know what I mean?
Right, sue. Yeah, basically, it's
Well,
litigation. How long does litigation take?
Years.
And so getting that money back. That's going to conclude today. I want to thank Matt Anderson with the Republic Title for coming on, and I'm sure we might have some blooper reels and some TikToks that are going to come out now after some of those stories because we went a little bit long. But thanks again, guys, for tuning in. Remember, click it, like it, subscribe it, and share it with your friends, and we will see you next week.
Thanks for having me.